Today, Tony's financial tips and tidbits. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and property news with a distinctively Australian flavour. And today I'm joined by Tony Locantro from Alta Capital in Perth. Hi, Tony.
Good afternoon, Martin, and good afternoon, viewers, or evening, or whenever they watch it.
We'll just say good day and then we'll cover everybody.
Yeah, covers everything. Yeah.
How you been?
I've been awesome. I'm getting used to this working from home 4.5 days a week and pretty much wearing a bathrobe. And actually, my partner's having a fantasy about a man in a suit. So, might have to get the suit out one of these days.
Right, well, as long as it's you in the suit and nobody else, that's going to be okay.
Yeah, always good humour, that one.
And what we've got for the audience tonight is a really interesting but maybe a slightly eclectic conversation, because we're sort of standing back a little bit and talking about some of those things like financial education and, where are some of those insights to be found. I think this is a really important conversation at this particular time.
I think so as well. And we can become overwhelmed in doom and gloom, but I think you really need a sound basis and a financial education. So what I've done is I've come from pretty much school and developed my career and learnt a lot over the years, and I've applied it to how I go about advising my clients and looking at every single market to accumulating 10 years worth of deodorant, it turns out, because I kept picking it off when it was half price. And I didn't stop. So I'm under strict orders to stop buying deodorant and aftershave and shaving cream. So, look, my mind is so value-driven, it's not funny. It doesn't matter how much money you earn. You've got to apply those principles to the point where it adds value to your life and it doesn't become an OCD.
Yeah, it's very interesting. I survey households all the time, and I actually separate out what I call soloists and delegators, right? Delegators are people who really aren't worried about relativity and value. They just want somebody else to take the pain and go sort it out for them, right? But soloists, I'm a soloist, I think you're a soloist, want to actually get into the detail and know that they're getting the best detail they can, and will nickel and dime and will know all the rewards points on their credit cards and what interest rates they're paying. I mean, that polar behavior is really quite interesting, and it's very distinctively different. Yeah,
and I think if you apply it to most aspects of your life, and I mean, a lot of the female brain is largely geared towards like brands, same with men and sports cars, and it boils down to everything from buying stocks, property, to entertainment and holidays. And my motto in life is to always know the risk reward, but don't annoy the people around you with that information.
Yeah, because you don't assume that everybody else is as interested as you are in those same dimensions, right?
That's exactly right. Yeah. So, yeah.
Okay, well, let's begin to tell the story. And you've put a few slides together, and we might take a bit of a journey down those slides. And interestingly, you started with the interesting question of how did I end up here? That's a really interesting question.
Yeah, I pretty much, when I left school, I actually did quite well in my HSC, and I didn't know what the hell I wanted to do. So I ended up, I did a brief stint as a bank teller at Westpac, and basically then went up to the Sunshine Coast of Queensland and surfed, and then decided to join the police service. But during my early years in the police service, I'd walk around the stock exchange in Bond Street in Sydney in full uniform, and I started talking to people. And then I picked up the knowledge, and these older guys were all speculators. And then on night shift, I'd ask people to ask me share prices, and I'd try and guess the correct prices and try and pick a change in behaviour. But my mind's always been looking for future talent like spotting someone like Jonathan Thurston when he was playing for Newcastle, or spotting up-and-comers and looking for value, spotting surfers that would come up through the ranks. I sat in a hotel in Adelaide. I sat near Bill Short, and I thought, well, you're going to become quite a prominent politician. And didn't quite make it though. And but that's my mindset, and I applied that mindset to policing, to assessing people, to assessing situations where I could get in the car at the start of a shift and say to my partner, we're either going to have a quiet night or a busy night. And it's funny how those cycles work. So once I learnt the stock market, I thought, well, why not try and get a job in the industry? So I began writing on Hot Copper. So I was writing a lot of financial tips and tidbits, and eventually someone picked up on it and said, why don't you become a broker? And then I got into financial advice in November 1998. And this is when the market was pretty quiet. We're actually trading Optus warrants. And then I started to build my client base. And then we went into the biggest bubble of our generation, which was .com. So I've been immersed in it ever since. And pretty much my mindset is all about finding what is going to give 4 to 5 times upside on your money or beyond. And that's all my thinking. It's I think a little bit less, obviously, when it comes to property and other asset classes, but that's the journey. And I've had 22 years of it. I've been involved in some of the biggest mineral discoveries we've seen. .com was absolute madness. I've seen fear, greed and stupidity every day, and I deal with it. So, on average, I'm probably on the phone 50 times a day as a part-time psychologist. So I think it does take time to learn the psychology of markets, how people think, and finding value. And I don't think it's something you can learn very quickly.
Well, that's really interesting, because I am more and more convinced, and you could look at the property market and say there's a set of issues that relate specifically to the economics of housing, the mortgage rates and how much prices go up and how much prices go down. But actually the psychology, the lure of the crowds, the lemming behavior, all of that stuff, I think has a bigger impact on what happens to prices relative to all of those fundamentals. And I suspect it's true not only in property, but also pretty much in every other financial market that you can think of.
Well, absolutely. I think what we're seeing now in the share market is the Robin Hoods, $5 commission, and people can buy a minimum of $100 a share. I mean, that sounds a bit like bricks with the property market, for God's sake. I mean, and 10,000 people signed up. 10,000 people. I mean, I've been advising on speculative shares for 22 years, and I'm still learning. And these, you look at a stock like BrainChip, which ended up going up. We actually talked about it as well. That went up 1,500% in a year, and that upside was driven on Reddit, of all places. And then eventually my barista tipped it to me. Then one of my clients rang me and tipped it to me at 94 cents, and I think it's in the 30s now. So that is the power of social media. That's the power of stupidity, like all the 30, 40-something-year-old women that went into Ripple at $3.52 and blew up. So people actually, as I said before, the stock market is a collective of people with no friggin' idea what they're doing. And when I look at property, Martin, when I look at a family sitting around a table trying to work out, what the house is worth, trying to get rid of all the expenses, trying to sandbag their finances, to me, that's a lot slower process than in the stock market, where you can change your mind 20 times a day and still make $10 at the end of it.
Mm. Well, of course, the thing about property is that the entry costs are pretty significant, right? And the time it takes to actually transact is also much more significant. And quite often people, of course, are more attracted by a property because of where it is, or the view, or whatever, or it looks nice, right? And so you've got this other subjectivity as well as the economics. I mean, I've spoken to more than now 150 different people over the last couple of months. And it's very interesting having those one-on-one conversations with them about what's driving them, why they're thinking that property is the thing to do, what their expectations are, where they are in the cycle of buying or selling or thinking of buying and selling. And, the more that I've spoken to people, the more I realize that the complexity of the decisions that people take is pretty remarkable, and how little is based on the real mathematical, bottom line, as it were, of property. There's a whole bunch of other things that go on. But I also have spoken to a number of people who regretted past decisions substantially. So, they jumped into property quickly and then repented at their leisure when it didn't behave the way they expected it. And the other observation I have is that with property, if you do make a wrong decision and you end up in the wrong place or the wrong property, it's really, really quite hard to unwind that sometimes without taking a bath in the process.
Absolutely correct. If you go in and buy a new car and change your mind and try and sell it, you're going to do a hell of a lot of financial damage. And at the moment, there's been a bit of tension building up in the Perth real estate. And unfortunately, I keep looking around at suburbs where I'd like to buy. And I'm trying to get my mindset out of going ahead with it. But I'm looking at a suburb like Westminster, 12 k's north of Perth. And I'm thinking, geez, every one of these houses is great value, but do I want to pay $30,000 to $50,000 in costs to buy that property? And the answer is no, but my mind is so focused on value. I probably need an intervention to stop me from doing that. But it's weird. People will tweet and say, what suburbs you're looking at in Perth? So I scour the area, I scour realestate.com, and I say, shit, Westminster, hey, it's got its problems, but you can buy stuff with a 2 and a 3 in front of it. And I had this stupid thought that a group of middle-class educated people should just go in and buy up an area and transform it and get all the upside. Because if you have a look at areas, a lot of areas, they might have high crime, a lot of graffiti, lots of donuts on the roads, lots of mullets, all of that stuff, multiple VN Commodores at the front of a house. But if you can transform that, that's where you get your upside. And I don't actually know what the hell happened with Mount Druitt, how that became blue chip. I don't know, maybe the VN Commodores are upgraded, Martin.
Well, they've got little Rolls-Royce figureheads on the front. That's made the difference. But Tony, one of the questions I've got then is as part of your journey of education and exploration, what are the things that you've looked at and been informed by? Maybe some books and some other things, because I think you've got a few ideas.
Yeah, I put some slides together for viewers.
Why don't we just show that? There we go.
Yeah.
So this is an interesting one.
Yeah. Now, the book 100 Baggers is fascinating. It does get a little lost, but it can show that in the US, a company like Monster Beverages can increase 100 times in around 7 years. And actually the value of Southwest Airlines took 9.5 years to go 100 times. So Christopher talks about earnings momentum, PE expansion, ROI expansion, etc., etc. So that book, if you have to stick with it, it does get a little bit lost in the middle stages, but that's a fascinating book. And I actually had one of the chairmans of one of the companies I've heavily invested in, and he signed it saying, well, I hope we're one of those companies. So also, you've got One Up on Wall Street, which I think is probably, if you can get over the American angle on it, they also, I think in those days, they were still using quarter halves, 3/4 eighths to describe share prices. But Peter Lynch, a very, very sound mind on fundamentals. That's probably one of the first books investors really should read on the market. The third one, Devil Take the Hindmost, that just shows the stupidity of speculative bubbles throughout time. And the height of the stupidity really is the Japanese bubble, where they were paying over for real estate to get in the Guinness Book of Records. And the other point was that they had a golf club membership bubble, and one part of Tokyo was actually worth more than the whole of Manhattan at one stage as well. So that's a really fascinating book. You can you could almost picture the scams through the 1600s, through the spice cons, all the capitalism and general financial speculation. So that is absolutely a brilliant book. The Winning Habits of Warren Buffett and George Soros, I think, is an outstanding grounding book for those looking to get into the market or just become more educated. It's really well written, easy to read, and it just shows how these two, Warren Buffett's steady and stable, bought good companies and stuck with them. Soros is a bit more of a speculator. But if you have to look at 4 books, that'd be my top 4. Now, I must disclose, Martin, that I'm not a chartist. I looked at charting in about 1994. I just think that there's lots of computer programs now, and charting's a crowded space because everyone's looking at the one place, and there's lots of apparently classic charting books. But look, everyone can have their path to trying to succeed on the stock market. I stick to fundamentals, and if you always stick to fundamentals and buying a company that's undervalued, then selling when it becomes overvalued, I think you're going to do well over the years.
Yeah, well, I think that's interesting. And I did a lot of work. I used to teach capital markets to executives in all sorts of financial institutions, did it all around the world, actually. And we'd have a wonderful debate between the chartists and the fundamentalists, right? And the people who actually were doctrinally aligned to charts would always claim that they were actually as more predictive than anything else. And the fundamentalists would say, yes, but... It's a never ending story. And I also used to talk about the random walk on Wall Street, which basically is, can you really predict anything, or is it actually just completely random, going up, going down, going up, going down? I remember one trader told me a story, and he claims it's true, and I don't know whether it is, but basically he would actually sometimes, just as a matter of interest, right, he would take a dog for a walk in the morning, and basically if it did its business on one side of the road, he'd sell. If it did its business on the other side of the road, he'd actually buy. And he claimed that gave him a better inroad to the market than all of the charting and all of the fundamentals analysis that he ever did.
Well, there's lots of stories like that, like a monkey throwing darts. But, chartists, we need chartists. Fundamental investors need chartists and inexperienced traders to sell into. And that's what we've got now. These stocks that are going to massively overshoot on momentum, they don't know what a market cap means. They don't know how to divide a gold resource into the market cap, and they don't know when a cheap placement to insiders is coming. So it's all fraught with danger. But chartists will say to me, look, trade the trade, but they will cut their losers pretty quick. They'll let some of their runners keep going. But what I've noticed in some of the stocks the last few days, I've been watching these traders and they've got no idea what they're doing. And as soon as some selling volume comes in, the stock gets smashed. So my clients will see a bid and they'll say, well, look, can I sell all my shares? And I'll say, wait a sec, I have to feed this stock out slowly, because if I put 100 grand worth of stock up for sale, it will collapse because the panic merchants are trying to get out. So look, if chartists can make money, that's great. I'm actually encouraging more people to go trade, and especially the days of $5 brokerage. That's fantastic, because what I've built is actually, I must be grateful for your show, Martin. I'm actually almost full now. I don't think I can take on many more clients, because I guess I want to be able to maintain a high level of service rather than, because if my service slips, I'm going to lose clients, rather than trying to appease everyone that wants to make a quick buck. So I think the more people that go to these $5 services, the better. And unfortunately, for 4, 5, maybe even longer, they're going to have to be taught some brutal lessons. And the Dow Jones and the NASDAQ and the gold price will do that for them.
Mm-hmm. Yeah, I think you're right about that. And, the more I look at where the indices are in the US, the more I think it's not going to go up from there much, I suspect. The question is, will it move, when it will move? And of course, I guess that's contingent on the election and all sorts of other things. Now, one of the other things that you've assembled is some movies that also informed your thoughts with regards to what's really important. So maybe we can just explore some of those too. And I actually think you've made a very good selection here. I must say that all of the ones on this list would be on my list too.
Yeah, The Big Short I've seen 35 times. And it's now down to the point where I know each and every upcoming facial expression. And it's terrible. It's good to have in the background, but that's some of the best acting you'll ever see. And obviously the American people aren't going to give it a high rating because it involves their country and their stupidity. But I mean, Ryan Gosling acts his backside off. I think Brad Pitt, that the women aren't swooning over, does a pretty good job. But Christian Bale, what an actor. But that, I just don't think that movie's well known enough in Australia. I just think that we're heading into something that's going to happen similar, but everyone would rather watch something else. Boiler Room?
Well, I was just going to say before you jump on, the thing about The Big Short, of course, it was actually based on a book originally, right? And I've been following the author of that book and a whole bunch of others for many years because he's got a really insightful view, an inside view of the financial system and the financial markets. And every time I read his writings, I always learn something really, really important. So to my mind, there is underpinning the film, if you like, the author and the way that he's actually explaining how things actually worked. And he was a trader for many years. So it's actually, if you like, an inside job.
Yeah, absolutely. And didn't he have something to do with Moneyball as well?
Yeah, he wrote Moneyball, and he wrote, there's a whole list of others that I can't recall just at the top of my head. But, he actually was talking about some of the other early trading that was done earlier on. And, he basically worked in the trading, on the trading floor, and was completely taken in initially of all this enthusiasm about a trade being in the trading mode, but he started to get more and more doubtful about the whole thing, and then he started asking much more difficult and deeper questions, and he basically got more and more concerned about it and ended up leaving and then writing books about it, and has done extremely well. I do recommend pretty much everything that he's written. Now, you mentioned The Boiler Room, right, which is another one which I think is also an amazing story, but of course it's based on true life.
Yeah, the Boiler Room selling people absolute garbage stocks, and we hear a lot of these scams, and people keep falling for them. Probably didn't get as highly regarded as what it should have, but obviously people ploughing into speculative stocks should have a serious look at it, because even though the sales tactics here are obviously not as prevalent in other countries, there's not, there are companies that don't really have quality assets or represent quality investments. And the acting in that's pretty good. I found it quite enjoyable, probably due for a rewatch. Wall Street, the first one, was actually pretty close to one of the closest to actual what happens in the stockbroking office. So even though we've got the insider trading, we've got a lot of trading activity, like Charlie recommends some stocks based on technicals, which turn to crap, and Gordon Gekko has a bit of a dig at him. But I still think that that's one of the great movies, stock market-based movies of our generation. And I think that'll be timeless, even down to the computers, which are now relics. But no, I learned a lot from that movie as well. The Wolf of Wall Street, well, who knows how much truth is based on that, but certainly broking firms don't throw midgets at targets or have lines and grades of prostitutes in their broking offices. But again, it just shows what happened, how they sent Steve Madden, the shoe guy, public. And it was actually fascinating to watch a documentary on Steve Madden. And he realises that Belfort and that firm took him for an absolute ride. But I think that movie had the record for the most F-bombs in it of any other movie. But the Quaaludes to the cars, but I've had a little bit to do outside of Jordan. He went into some Australian companies which all blew up, and I think he was trying to sue one of those guys. But interesting, but probably more entertainment value there, Martin.
Well, I didn't say one of the interesting things, though, and you see it actually in pretty much all of those movies that you've spoken about, is some of the cultural norms that are actually there in the big trading houses and in the big financial markets and in the big financial systems, where, frankly, they'll do anything, say anything, and truth is not what we're talking about. It's making money that's what we're talking about. And I think that's a very interesting observation about life, and specifically about big business and finance, and the way that really the moral compass that they fly by is such a different one from my own moral compass that I find it quite hard sometimes to watch some of that without getting really cross.
For sure. It's certainly a tough one. 99 Homes, I thought that movie was brilliantly done. And you could it was so well acted, you could feel the angst and the despair of the people involved. And unfortunately, I don't know if this is a prelude to something that could happen in Australia one day. And I just think that whole scenario was rather sad, and what families would go through and how they tried to hold on to their houses and how he actually bought his family home back at ridiculous interest rates. But, if that can happen, if that's going to happen in the US, I'm a bit worried about what could happen here, because you're going to have outer suburbs which are not only sinking in value but also sinking ground-wise as well. So could get very ugly.
Yeah, and the thing about that one, of course, that was post the global financial crisis and all of the default properties that basically there were, and how they were handled, and basically people were thrown out and all those sorts of things. And again, it goes back to the moral compass, right? That there's a set of morals that clearly don't work very well for individuals. And it's interesting, of course, in the US after the global financial crisis, many of those properties were sold to big business at a very discounted amount, firstly. And secondly, many properties were actually knocked down because they were just going derelict and nobody wanted them. And I think those two outcomes should concern everybody in Australia when they think about the property situation here, and particularly now with those high levels of unpaid loans and holiday periods on loans at the moment, because unfortunately I think we could be facing some of those similar stories down the track. I hope not, but I am quite concerned by that.
Well, when the banks, when obviously there's a foreclosure, what the hell are the bank going to do? Are they going to bundle these up and sell them to private equity? We've still got all that to come. People don't realise people aren't paying off their home loans. A lot of people aren't going to even attempt to. But once, I've spoken to people that were involved in Ireland, that they had thousands of homes on their books trying to get rid of them. So we're going to see some scams emerge and some predatory behaviour once these homes are foreclosed on, because I just can't see how families are going to be able to hold on to them, Martin.
No, well, I agree with that. And of course, the height of the issues were 4 years after the global financial crisis. It wasn't all on day one, right? This basically had a significant long-term effect, and a decade later, people were just getting over it. And I just worry that we might be seeing something similar here in Australia. I hope not. I hope we can find an alternative way through, but it doesn't look as though we're going the right way at the moment, I have to say.
Yeah, and the last one there, up in the air. Look, I guess what came through in that movie was the despair of people that have lost their jobs and these stupid packages that employees are faced with, and given a bit of a salary, and then some psychological help. And I think one of them in the movie ends up jumping off the bridge, which she said she would. But I still think that a lot of those psychological and financial issues are still yet to emerge, whilst we're still living under this cloud of stimulus. And it's pretty entertaining. And I actually quite enjoyed that movie, probably less as heavy on the financial dialect and themes.
But I think you make a very important point, and it's one I've made it myself a few times, that, we just can't talk about this from a financial perspective. There is a social and relationship perspective. And in fact, some of those issues probably are even more concerning. And I worry that perhaps we are looking at this through too narrow a financial lens, and that's true at the government level as well as individuals. I mean, there are social consequences. I remember talking to people from Ireland who were there, a decade plus ago, and Eddie Hobbs, for example, one of the people I interviewed some time ago, kept saying, "You've got to understand this is not just a financial thing. This is a social thing. This is a structural thing for society." And he also went on to say, and remember that how you handle bankruptcy and how you actually help people escape debts that they can never pay off is actually a very critical question. I think we've still got a lot more work to do on that as well.
Yeah, I don't think the policy will yet be written on that. And I think it gets to the point where a lot of families will hold on, but it's going to take a long period for them to realise that they're cooked. Because I don't know how many people will go through and rigorously do a budget, try and cut out. Now, if you cut out all your gym membership, subscription services, maybe sell one car, you're still going to be in a huge situation of negative equity. And I just mentioned a car. I actually went on to car sales in Perth, and geez, the secondhand market has tightened right up. There's not many cars for sale at all. And a lot of those cars with even reasonably high kilometres on them are trading at astronomical levels. And I've just never seen a market like that tighten up, Martin. It's a weird phenomenon, isn't it?
Well, I reckon you can trace it directly back to the 19 billion pulled out of superannuation. The job seeker and job keeper payments that people have. People have got money to burn at the moment, and in some cases they're saving it, but in some cases they're just splurging on stuff. And unfortunately, that stuff is going to have maybe some short-term gratification, but may well actually down the track create more issues. So I'm not too surprised to see that some of those things. I reckon they'll be back on the market in a year or two.
Well, I think now, because I obviously have a look at car sales, and now I think now is the perfect window to sell your second vehicle, I think. And just bite the bullet and think, well, hey, wait a sec, if you've got someone that can drive for you and you just keep switching between Uber, Ola and Diddy, but I've just never seen such a better selling opportunity in used cars. And even to go sell it to a dealer, I mean, they're crying out for stock. And people don't realise is what a used car dealer will do is get the people on the finance, get them on the servicing, tyres, warranty, paint protection, all the rubbish they don't need.
Yeah, that's very true. And it is on the extras and on the servicing rather than actually on the car itself. Certainly see that. Now, your next slide, I have to say, I don't understand this slide, but I'm sure there's some method in your madness of showing this. So let me put this one up and then you can explain what it is that this slide is.
Okay, so that's the gentleman in that picture that's Lockie Gilbert from The Bachelor. And that's what stock selection looks like for a new investor.
Great.
That's what you're faced with, because every company, every one of them you take home, maybe bar one or two, but the key, Martin, is to find out who can hold a conversation, who can cook a roast, and who isn't going to take 80% of your money. So that's the key. And I don't think learning to pick. I know he went with Irina. but probably the worries about Lockie now as all the others come out with their stories and try and keep their Instagram followings up. But that's what it looks like for a new investor, and that extends from any market. And can you imagine looking at properties? If you go out to outer Western Sydney, all the houses seem to have those terrible brown bricks on them. So it's just, everything looks beautiful until you actually get to know it a little bit better.
Yeah, and I reckon that's very, very true of new apartments in particular, right? Looking at what's happening with poor quality construction and the high costs of maintenance and those sorts of things, right? So it might look great on day one. And as you say, looks can be very deceptive, but you have to go deeper. You have to actually ask the next level of questions and actually do the work to really actually separate sheep from goats.
Yeah, so that's the point of that slide. And to learn what makes a decent investment takes a lot of time, and I'm suggesting that you just can't rely on tips from your barista or your Uber driver or your mate's second cousin best man's girlfriend or whatever. That probably made no sense, but I mean, to get financially educated does take time. I was actually explaining to a new client yesterday that when you put together an investment strategy, it's like putting together a rock group. So you look at your bass player, your drums, your rhythm. You then have a rhythm guitarist, a lead guitarist to do some pretty crazy stuff, and the vocalist. So you don't want to over diversify, but to me, the investment can be put together like a rock group, rather than just buying a heap of crap. So that was a point of that slide, Martin.
No, very good. And I'm afraid that it was lost on me because I've never seen the Bachelor and didn't recognise any of the players. So,
you're missing out.
Well, maybe I'm just too busy making my shows to watch other people's shows, and maybe that's a good thing. Maybe it's a bad thing. Now, your last slide here is actually very interesting because it is essentially your top tips for all markets, and I think these are really, really important points. So let's maybe put that up, and you can just talk us through it.
Yeah, buy the bad news. If there's something that seems so good, everyone knows about it, and a lot of the time it's actually factored in. So that is in the case of emerging both stocks and property, where the smart people will find out that a railway line is going in, whereas the dumb money will buy because the railway line is actually in. So it's best to find these things early. And if you can spot a company that's just tiptoeing through the tulips, or a suburb that's, as I mentioned before, might have a bit of a youth crime problem, might have car problems, issues, dilapidated buildings. But if you can see that emerging, that's exactly where you're going to get your decent uplift.
Yeah, very good point. You often are in too late at the wrong time, and if timing is everything, is on some of these things, isn't it?
Yeah, absolutely. So I've been pretty much on social media since 1997, pretty much when I got the internet, basically. So what I think now, the go-to spot for everything financial is Twitter. So what you can do on Twitter is, if you want to find out about a stock, you just put in $sign with the ASX stock code. But some of them obviously will bring up a heap of mainly Asian sites and information. But I just think Twitter has overtaken all other sources of information. And even though the older generations probably aren't as tech savvy, I think there's some brilliant people that need to be followed on Twitter. And I think everyone should be on it that's pretty much watching this channel, Martin.
Well, I was rather intrigued that you added there in that second paragraph, Twitter apart from DFA. I'm pleased that you're putting DFA in a somewhat hopefully elevated capacity, which is what we're trying to do, right? By providing more insights and more information for people, not telling them what to do, but perhaps telling them some thoughts about what questions to ask to become better informed.
Exactly. You're doing a great job. And as I said, Alan Pease was quite enjoyable. I like watching what Alan does. I've read his books. I actually based my theory on attracting a good woman off one of Alan's books. So, yeah, there you go. There you go. And yeah, I hit the jackpot.
Very good. Okay. Now your next one's very interesting too.
Yeah, there's for small cap stocks, Proactive, small caps, and Spotty are really good information sources, and I'm on all three of them. So if you follow me on Twitter, I do fortnightly interviews with Proactive, small caps, and Spotty's the live show I do with Elio D'Amato on Ticker TV, and you get a combination of blue chips and small cap stocks. And it's pretty much the old, a fair number of the old crew from the old Your Money, Your Call days, which I used to do on Sky Business. I did that for 8 years, Martin. So now, since it got axed, that's where I appear now and offer my insights. So what I think is quite important is to constantly carry out risk-reward analysis. Like if you've made enough money, it's equivalent of a lotto win, why the hell are you still holding it? And would you be better off to switch into another investment? Take a portion off it. If you've bought a stock at 5 cents and it's trading at $10, I mean, get the hell out. I have had examples of that with some of my clients who must be borderline comatose. But the other interesting point is always stress test. Don't assume that your mortgage rate is going to stay where it is now, or your rate of return trading shit stocks on the market is going to maintain its level of trajectory. I think what people don't realise is that in the event of an economic reset, that interest rates will start to reset as well. And I always cop a bit of a barrage from people saying that interest rates will never rise. Well, I think at some point they will normalise, and that CBA cash, the RBA cash rate, the average long term is about 6.5%, and then the banks have got to tack on the rest for a mortgage rate. I think mortgage rates of anywhere 4 to 5% are going to kill a lot of homeowners, and those that are struggling, that even those with jobs are going to struggle. So what I think is Australians don't look ahead enough, and they just assume that a 2.99% mortgage rate is going to go on ad infinitum until they pay off the home loan, and that is not going to happen. And there's going to be other bumps to contend with as well, such as loss of income or sickness, illness. So I think a lot of people, when they bought properties in 2017 near the FOMO peak, have priced their life in for perfection and haven't done any stress tests whatsoever.
Yeah, well, I think that's quite right. I certainly see that as well. So always think about what if it goes wrong, what if things change. Very important point.
Absolutely. And yeah, the majority are often wrong in the end. You can see that with most fads. You know, these people that bought shipping containers of stonewashed jeans, fidget spinners, Oshies, all of that are wrong in the end. I mean, fads just lose momentum. And I think what you're seeing here is the mainstream press have seen home prices stabilise or only slightly drop, and I think the storm has passed. But if you look at the qualifications of those in the press, they might have a degree, which to me is the equivalent of economic and common sense handcuffs, because they are handcuffed to their beliefs and they're not nimble enough to move away from them. But some of these articles must be of severe concern to the general population, especially when you've got Westpac, who just copped one of the largest fines in corporate history, saying house prices are going to rise 15%. I mean, we're in the worst economic times of our generation, and they're touting this stupidity based on what, Martin?
Well, I've got a particular view there, and that is if you look carefully, the banks have a vested interest in trying to keep the property market up, right? And I noticed that a couple of the big banks have changed their tune remarkably over the last month, from significant falls to very small falls and then very big rises later. Now, I wonder whose book they're actually talking.
Well, it's certainly not ours. So, yeah. So, yeah, that's ridiculous. So,
I know your next point's really interesting too. The majority are often wrong in the end, right?
yeah, I think so. And I know that in the movie The Big Short, I mean, they were wrong for quite a long time, and he kept putting up the negative returns on his fund, but eventually it all came true. But the issue is that stupid money can go on much further than what we realise. And I just think a lot of people will start trying to get into arguments with Switzer and Chris Joy and Kukulis and Westpac or Bill Evans, if it was Bill, or anyone else. But to me, life's too short for that. I just think you're best to stick to what you know and just watch it unfold. As I said, why try and reason with an angry dog?
Good point.
Now, my next point is I just think in life we carry too much stuff we don't need, we don't use. There's a bit of a run on Gumtree on, a lot of household items you're able to sell. Maybe there's still a window to sell treadmills, exercise bikes that no one ever uses. And I just think one of the best things you can do in life is to declutter and actually take a bag of your shirts down to charity. I mean, during COVID, I've gone from wearing a suit to a bathrobe, and suddenly my size 41 shirts are now 43. So I thought, well, I might as well just go and take them down to charity. And there's a lot of stuff we don't use. Curbside collections in 2 to 3 years are going to be absolute classics, because you look at, Jerry Harvey was on the news saying his sales at Harvey Norman have gone parabolic. Well, yeah, that's fine because everyone's had handouts, but you look at the amount of shit that's going to be thrown out over the next 2 to 3 years. I think curbside collections will be overflowing, and it's going to be a bit of a bedlam, Martin.
Yeah, I tend to agree, and I should do something about my garage. We moved 8 years ago, brought a load of stuff. It's still in the garage. My theory is if you don't use it in a year or two, it's time to get rid of it. So it's on my list of things to do when I'm not making shows. That's what I'm going to do.
That's one thing to do. Yeah, for sure.
And then your last point is live in the present, and that's a really interesting observation.
Well, I just think people will ring up and say, "Look, I don't want to be a client yet. I want to come to you when I've got more money," or you won't do anything till you lose a few kilos. And you just think that you need that sports car to be able to pick up women. I actually, on the weekend, I had a client who, this is a story I probably tell too often, but anyway, I'll tell it again. He put $7,000 into Northern Star in 2010 and has just pulled out $1.2 million. And he also did it with another stock called Atlantic Gold as well. So he got a big takeover there. And on the weekend, he said, well, I think I owe you a cup of coffee and a toasty. And we sat down and had a bit of a chat to him. But when I knew him as Poor Joe, and now I know him as $1 Million Joe, all he wants is the next $1 million windfall. And I don't think he's going to be happy till he gets it. So I just think we can worry about certain things. We can argue. We can write letters to the editor till we're blue in the face. We can go on with all these conspiracy theories. Okay, some of them there might be some truth in them, but for me, life's way too short for that shit, Martin. I'm here to buy low, sell high, don't break the law, and be good to people that are good to me. And I think, life is going to head back to basics. A less is more economy. We'll see less of these influencers, these useless shows, useless things we don't need. and let's get back to human relationships. You know, something a bit like life in the 70s, hopefully minus the interest rates.
Well, let's hope so. And I love the quote at the end, Tony. We'll just put it on the screen about the bull market. That's really worth reciting, isn't it?
Yeah, it's at the start of the bull market, we have all the paper and they have all the money. At the end of the bull market, they have all the paper and we have all the money. So pretty much buy low, sell high, and get rid of it, because in the end, the dumb money is going to end up with all the foreclosed properties, and that dumb money is probably going to be the banks.
Yeah, I think you could be right in this case. Well, Tony, I've really enjoyed speaking with you on this very interesting ramble through your thoughts with regard to books and movies and tips in terms of investing. Thanks very much for sharing it with us. Been very interesting. And I look forward to catching up again when we will take the conversation into who knows where.
Yeah, I think it'll be back to the regular doom and gloom and everything shit argument, pretty much. But I just thought it'd be nice to break things up. And I saw in some of the YouTube comments that people were asking about your favourite books, and I thought I'd give you a bit of a hand.
So, Tony, thanks for that today. Have a good evening, and we'll see you next time.